stock market today analysis for December 2nd, 2022. We see the Nasdaq down by 0.18%, S&P 500 down by 0.12%, U.S. Treasury 10-year yield down by 1.1 basis points, gold down by 0.15%, Bitcoin up by 0.40%, and oil down by 1.27%. Earnings. Had some earnings today. Looks like a total of 5 companies reported. There they are right there. Next week, got more earnings being reported. If you need to, make sure you're on top of knowing who's reporting and how to appropriately deal with that. The VIX hit a low of 18.95 today, closed at 19.01. So the VIX has been dropping. As you may or may not know, I've been testing a VIX strategy, which is basically when the VIX is low, you sell call options, and when the VIX rises up, you close those call options out and sell put options, and vice versa. If you want to get the full details of that and see me put on those various trades, you can check out this link right here at the 156 mark of this video and watch that video that explains that selling options with the VIX strategy. So continue to watch the rest of this. Go back at the 156 mark, watch that. Let me quickly go over some of these. This is something I'm experimenting with on crude oil futures. Right now happens to be up by 20 bucks. I do a lot of experimenting in this account because it's a simulated trading account. So you can see I've done a lot of experimenting, fairly decent amount of experimenting on crude oil, enough to the point that I'm not losing over $2,000 on this particular trade. That's throughout the course of the year. Okay, so this one is with that that volatility trade using the VIX, and Apple's up 185. Amazon is up $2.50. Citibank is up 65.50. Coinbase, I just bought a straight put on that, and Coinbase hasn't really dropped. Oh, there we go. Now it's I can't remember exactly when I bought that. I wouldn't be surprised if I bought it somewhere in here. Let's see, 1, 2, 3, 4, 5, 6, 7, 8. Yeah, I wouldn't be surprised if I bought it somewhere in here. And just kind of going sideways. You know, when you buy an option, it loses value with time. So time's going by. It's not dropping anymore. Somewhere in here would have been the time to buy it. And with this popping up and losing value, it's dropping even more in the, in the negative to close that out. So no big deal. That's why I just threw it on here in this simulated trading account. Just wanted to see how far Coinbase was going to drop. And for me, when I really want to pay attention to something, I put a trade on it. That really usually gets me more paying attention to something. And obviously, if I don't want to risk real money, then I'll just throw a paper trade on it. Now this one is selling a cash secured put option on H&R Block, which I made a different video, and that one is probably the most recent. I think it's the beauty of selling cash secured put options. So look for that in the playlist, the cash secured put option playlist. I'll talk about the beauties of selling cash secured put options. If you don't want to watch that whole thing, I'll give you the highlight. All these other trades, I care about what happens to them upon expiration. I care about what happens to them on a day-to-day basis. But with this one, I don't really care, because at the end of this expiration period, I'm either going to keep the $40 I brought in from selling the option, or I'm going to buy 100 shares of H&R Block at $37, and I'm going to keep that 40 bucks. I don't care. I'm happy with either outcome. So I either make money, or I make money and I buy an income producing asset. It's currently trading at 42 for a discount of 37. I like buying income producing assets at a discount. Intel, this is another one that is a volatility trade, and that one is currently up 50 cents. Microsoft, that's a volatility trade, down 205. Netflix, almost down $1,000. Nvidia, down 137. SoFi, down 50 cents. SPX, this one I did a spread. So I sold the 4600 call, bought the 48 for some protection, and that's currently down by 365. This one is a little thrown off with SPY because I shorted one share of S&P 500 a while back, and I didn't close it out. So it's in the negative by a little less than 40 bucks. Then I got this call spread on it. Sold the 420, bought the 430, and that's in the positive by what is that? Little over 20 bucks, somewhere in there, 25 bucks. Tesla is down almost 600 bucks. So these ones that are down quite a bit, besides coin, that are the volatility trades, most of these have expiration dates in 2025, 2024. So I'm gonna let those I'm gonna let these play out, let these ride out, because I'm not actually losing money. I'm running an experiment to see what's gonna happen, and I got a lot of time on my side. Even though there's a lot of time, every day that time goes by, the theta value of the option runs out just a little bit. So I'm gonna let them play out, and I'm gonna see what happens. I'm gonna see how long the VIX goes down. I'm gonna see what happens when the VIX starts going up, and then I'll keep learning from there. But so far, I've been enjoying this experiment. And again, I think it's at the 1:56 marker. You can watch that. MMRI risk indicator dropped down even more today. I think it was down at I think yesterday it was down around thought it was in the 30s. And I kind of liked my old the way that I was tracking this before, because I was tracking every day. I was tracking the points. I had a little graph going, but ever since they came out with this one, I haven't been using my own spreadsheet graph, and kind of lost track of what number it was on what day. Not too big of a deal though, but it's still in the high risk. But you know, we used to be up here pushing, going into extreme. I think one time it actually hit in the extreme risk, but risk is coming down via this risk indicator. So if this, I don't know if this directly is going to relate to stocks going up. I could see how stocks might move sideways or go down a little bit, but the risk of a big implosion in the stock market could be down lower. But I don't know. I didn't come up with this indicator. I think it's good to watch, just to have, you know, like a whole dashboard full of indicators and kind of looking at certain things. And, you know, some things you only look at when they turn on, like the, you know, low air pressure in your tire indicator. There's other indicators like the speedometer. Maybe you look at that more. And there's other ones that you look at less than the speedometer, but more than the air pressure, and that might be the gas gauge. You know, a variety of other things. And you use all that information together to make the best driving decision for yourself. And that's kind of what you're doing with all this trading stuff. You're figuring out what to do. The 10-year treasury is a component of the MMRI. And here's a total of 4 different treasuries: 13-week, 5-year, 10-year, 30-year. The 10-year is one that a lot of people will watch. A couple weeks ago, all these, might even be over a month ago by now, I don't know, but not too long ago, all these treasuries were pushing at the top of this 52-week range. And you see now this 30-year, it's significantly off its high. It's probably about like 25% off its high. And it still is kind of like the longer the date, the lower the rate. Right? So this is shorter the date, that's the closest one to the 52-week high. This one, kind of going down a little bit. What does that tell us? I don't really know. You know, these macro guys, they really will tweak out on the inversion of the yield curve. The yield curve's inverted. And some of them I had to stop listening to because, man, you talk about it like the sky is going to fall tomorrow. But apparently, whenever there's a yield curve inversion, which is basically a shorter term rate, you have a higher, you're getting paid a higher amount to loan for a shorter duration. Like 13 weeks, you're getting paid 4.2%, whereas you're loaning the government money for 30 years, getting paid significantly less, like 3.56%. But the risk is actually loaning for longer, right? You get your money back in 13 weeks, that's a less loan duration, so less risk. So why are you getting paid more when you're taking on less risk? And I don't know which ones they watch exactly. Maybe it's the 30 and the 10 and all this stuff. But apparently it's a really good indication of a recession coming in. But this year, the government changed the definition of a recession. So good luck with that. I don't know. You know, for me, if you've watched these videos before, I've told you before, I don't need somebody with an expensive haircut, wearing an expensive suit, to come on TV and talking in some jargon words from an expensive college to let me know that stuff is not good in the economy outside. For some reason, you know, maybe I'm gifted by God, but for some reason, I can just tell. For some reason, I can tell if restaurants have closed. I mean, I don't know. You try it out sometime. Maybe you got the same gift from God. Maybe you can remember, hey, there was a restaurant here. In fact, there was 3 of them. They're all closed. There's no one. Look, I'm in this restaurant. There's 10 tables. There's only 2 people in here. Huh, this used to be full. I don't know. Maybe other people need a fancy suit and an expensive haircut to be able to figure that out. But for some reason, your good buddy Brent, you know, I'm naturally gifted. I can just tell those things. I can just remember that, hey, this restaurant, it's not here anymore. The small business that was selling clothes, it's not here anymore. Whatever the case may be. You know, I know there's more things that come around with the economy, but how does that affect trading, though? That's really the thing. Like I keep looking at for maybe 2 or 3 years. I'm hearing people talking about these. Watch the rate on the treasury, la da 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 da, and that's kind of how I learned about with this yield curve inversion. But I'm thinking, like, what applicable action can I take today that's going to make me money in the next month to 6 months, week to 6 months? What is it? I don't know. No one ever explaining it, but they sure like to go on TV talk in circles about it sometimes. You know, maybe maybe you can get on Twitter and tweet out to somebody and be like, "Hey, you keep talking about this yield curve inversion. Give me an example of a trade that has been put on in the last 3 months, specifically from this information." or is it just something to talk about to get put on TV? Anyways, let's look at some stocks. We got the S&P 500 over the 200-day moving average, but it's having a hard time. You know, it's not skyrocketing up. Right here, we see on Wednesday. Was that Wednesday? Yeah, Wednesday shot up. Wednesday shot up past the 200-day moving average. Yesterday, this candle, even though it was a bear candle, it stayed in the top part of this bull candle. And then today, we opened up still in the 50% of this big gain candle, but below the 200-day moving average, and closed above the 200-day moving average with a little bit of a shadow sticking up. So we see prices pushed up higher, but selling pressure brought it down. Is this going to be a small head and shoulders, shoulder head? I don't know, but that's not super powerful. Doesn't matter if it's not super powerful. Look at this. This wasn't super powerful, and it resulted with going up. Well, it's kind of sideways there, right? But eventually it went up. The other thing that we got going on, actually I'll get to that later. Don't want to blow my load too quickly here. I'm on this, I'm using this, all right, we got some technical difficulties, so I'm going to use a totally different chart. No 200-day moving average, no moving averages, right? We're just looking straight like that. This is, you know, I have a few different brokerage accounts, a few different ways of looking at charts, and depending on what I'm doing, I have things set up a little differently. So anyways, so now we're looking at the technology sector. We see the technology sector similar last couple days. So we'll just try you know, something different. We see what do we see? What are we looking at here? We are in 3 months, 1-day chart. And basically, look at that. It's just basically gone sideways in 3 months. Yeah, it went a little bit higher right here, and it went lower down here. But from here, you can see that going across. Like, it's in that same area from 3 months ago. And so, is it going to, you know, break out of this significantly? At the moment, it seems like it's getting some resistance right in there. And we know that's it's right in that 200-day moving average. So technology sector, what do we got? So we got a low here, another low, it's moving up, maybe another low moving up here. All right, and let's look at XLV, healthcare. Healthcare has been the strongest sector of the S&P 500 sectors that we look at. S&P 500, you know, sectors making up the S&P 500, continuing to kind of move up. Same thing happened, right? We got this big Wednesday, big candle up. Thursday, it's kind of hitting its head against the resistance. Today opens up, I think the 200-day moving average is somewhere down here. I think it's been above the 200-day moving average for a while. So looking pretty strong. This is probably the strongest sector out of all those. XLF financials. It's been moving up pretty strong too. Definitely higher than it was 3 months ago, and dropped down considerably, right? We're back down where in the lower, not the whole trading range of Wednesday, but the body of the candle. We're in the lower 50% of the body of the candle. As far as the whole trading range, right? It's right in there. So that's not looking too good, and it's basically been going sideways since when is it? Since about the 10th of November. It's kind of been in the sideways range. XLY, consumer discretionary. I think this has been below the moving averages for quite a while. You definitely, I hope you can definitely see it, but it's just been in the sideways range, right? Look where it's at. It's just been kind of going sideways, up, down, sideways. So this is one that you'd have to check out more things. There's more to it than just the pattern. You got to look at what's the premium and a variety of things. That's why you get your simulated trading account and do it. But look at selling an iron condor on this. Look at selling a naked call option, naked put option, naked put option, naked call option on each side, but a simulated trading account, right? Throw it on wildman style, see what happens, or at least look into it. But we definitely got a sideways pattern going here. XLI, industrials. This is another one that's been more on this upward trend, and kind of continues to do that. We have this sideways range right here. So right now is it out of that? Yeah, I would say it's out of that sideways range. It kind of seems like it, but it might fall back into it. It seems like maybe is it gonna start with a new range right in here? No, I see a lot of sideways, a fair amount of sideways movement going on. What stocks do I have on here? Nothing worthwhile. All right, so let's take a look at IWM. Nothing worthwhile for the moment, right? IWM, sideways, right? Look at that. Boom. Was over here. Overall sideways. It went down, but in 3 month time, it's kind of been doing the sideways thing. It went down here. It went up here. And what do we see? It was a bit of, here's another little sideways range bound from here to here, and it's still basically stuck in that range from about right there to about right in here. Opened up down here, closed here, really hitting its head on there. And IWM, let's take a look at the Qs. Another one that kind of sideways. Basically from 3 months ago, it's in this area. It's basically a little down, but it's been doing a lot of sideways motion, right? You got to kind of right through there, but it's lower than it was 3 months ago. So what do we think it's going to do? I don't know. Here it seems to be topped out here. Maybe it's going to keep pushing against here. Something that I was talking about, not blowing the load. So this is a line chart for 1 week. We see that if we zoom in, basically each one of these where it changes color is 1 year. And we basically kind of started this bear market the beginning of or the end of last year. So it's getting close to 1 year, right? And now we see that channel. It's out of this top part of the channel, but you see here it was out of the top part of the channel, and then it failed. So we're waiting to see what's going to happen. And some of the things that are working to the upside is that during the end of the year, holidays and things like that, there's really light trading volume. And um, overall, people people from various places in society are rewarded when the stocks are up. So overall, generally speaking, it benefits it benefits most people to have the stocks up, whether they're up for legitimate reasons or not. For an example, if you're a politician, doesn't matter which denomination, for lack of knowing what those creeps call themselves. Um, if you're a politician and you're in office, it benefits you to have the stock market up. If you're not in office, then it benefits you to have the stock market down. I mean, it doesn't matter. The fundamentals, the legitimates, like, is this a good company, that type of stuff, it's irrelevant. Just like, hey, stock market up, I'm a good politician. So we always have somebody in office, right? So there's that effect. And then there's a President's Working Council on the Markets, aka the Plunge Protection Team. Look it up if you've never heard of it. Ronald Reagan, like 1988 or so, put it into existence by executive order, and since then, it's a group of people that, like, I think some people of the Fed, Treasury. I'm not exactly sure all these people. You can read the Wikipedia page. You can read from Investopedia. You can read from all these different things, and you can learn all about it. But nonetheless, they're there to get the stock market to do what the current president wants. Republican, Democrat, it does not matter. It's there. It's there, regardless of who's in office. So we got stuff like that going on. I think CEOs of investment banks and things like that, I think they get some sort of bonuses towards the end of the year. So that maybe CEOs of, like, these big corporations, maybe they also, like, Disney or whatever, Caterpillar, maybe they get some bonuses if their stock price is up. So there's a lot of, and then in general, right? Also I already went over the politicians, but basically, they like to, point to stock market and say, hey, look at your 401k, look at it's up, that's because of me. So you got all this stuff going on. So light trading volume, they can push things up. Can they keep it up? They might be able to keep it up. So just because it's up on, just because it might be up on a little bit of rigging, doesn't mean it doesn't mean don't take advantage of it. Doesn't mean don't take profit of it. But I'm saying all this stuff to say that once after the holidays, when you have regular, when we kind of get back in the swing of regular trading, normal volume, what's going to happen then? I don't know. I have to wait and see. Personally, I don't care what happens. I'm going to make money no matter which way the stock market moves. I don't care. I'm just trying to figure out which way it's going to go. So right now, it's definitely out of this range, right? And so up to the top side, around this 427, let's say 430, somewhere in there. High 420s, low 430s, somewhere in there. Want to see what it's going to do. Is it going to break out above that? Another smaller one to look for is right here. So basically, you can see what I'm doing. I'm looking where it's went before and where it had some sort of pivot, like right here in this area. It went up, but it couldn't support it, so it crashed down. Same thing. Right? Went up, couldn't support it. So the first thing, we're almost there right now, right? 415. This 406, 47, like 410, that's probably the first place that we're looking at. And right now, it's knocking on that 407. So let's see what it does at 410, and then getting into 415, and then getting over there. Maybe it's not going to get that high, maybe it will. But if it doesn't and it's going back down, then we want to see what it's doing at this first little kind of in this area. It doesn't have to be exactly this number, but it seems like there's a little bit of a range from the high 390s to about somewhere there, just like all through the 390s. It might get stuck in there. Another place that that's a 390. See, then we got the 380s, right? So let's just say 380 to 390 seems like in that area could get stuck. But here's going to be the big one. If it fails to keep going up and it starts testing back down here again, which this is a lot of people's favorite number, 357. If it starts testing that 357 or breaks through that, then we know we're definitely going there. But right now, obviously, we are up. We're going up, up and away. We want to see if that's going to test this. So what also could happen is we could end this bear market not through a bull market, but through a sideways market. It could rally up to about I don't know, somewhere in the 420s, get to about 427 or something, and fall back down to about 380, and just kind of keep doing that. You know, who knows? Just have to kind of wait and see. In the meantime, if you're unsure of things, paper trade. And let's take a look at oil. Come on, yeah, there we are. So oil, 3 months sideways, right? Kind of, it's down right now from where it was exactly the beginning of here, but it has been in this range from about right in here. Got as low as we could say about somewhere in the mid 70s to about this low 90s. It's kind of been in that range, with more often than not, yeah, more on the mid 70s. And right now we tested those lows, kind of going back up against. What's good to do is you look at your whatever candle you're on, you start looking to the left. And we see here in the past, in this area, right, prices were overlapping, kind of getting stagnant in this area. Look to the left. Has it done that before? Yeah. And does it have to be right to the penny? Right? No, not necessarily, but it's kind of in that area. So seems like around the 81, 82, 80 to $82, somewhere in there, 83. Seems like it kind of gets stuck in there. So if it can break out through that, then maybe it'll go up and start testing in this range. But seems like it's just kind of been range bound, right, for the last 3 months in that range of about mid 70s to low 90s, and seems to be following suit with that. Gold seems to have broken out of this range. You know, for a while it was like topping out around the like 760 was kind of the thing, or you can see right in here where it was started to get close to this 730s, 740s, somewhere in there, and fell down, got a bottom, kind of this triple bottom here around this area of the low 1600 area, and then starting here, the beginning of November, rallied up, pulled back just a little bit, back to that 740-ish area, right? Boom. That's what I'm talking about. Looking to the left. See, for some reason, prices like to stick there. But on this time, when it was being resistance on this side, it ended up being support here. And then it rallied up, kind of got stuck in this area, the 760. You can see prices overlapping here. Boom, seem to have broken out. Now I think the 200-day moving average is right around this area, somewhere in this 1800 mark. Is it going to keep doing that? I don't know. We'll have to wait and see. I might have told you guys before. Well, I know I've said this before in these videos, but I'm not sure if you watch us. You know, to me, the paper price of gold doesn't really matter, because if the paper price goes to 2,500, or let's say the paper price doubles, whatever this is, whatever that would be, somewhere over 3,000. That doesn't mean you got 2 ounces. You still got 1 ounce. And if the paper price drops down to $800, it doesn't mean you lost any amount of an ounce of gold. No matter what the paper price is, you got an ounce of gold. An ounce of gold is an ounce of gold, and it will always be an ounce of gold. It doesn't rust, it doesn't do any of these things, it doesn't have any counterparty risk, it just is there. It's an asset. So yeah, I like paying attention to this, and I like trading some and investing in some of the miners and the royalties and streaming stocks. But that's more or less why I pay attention to the paper price of gold, is to try to figure out what will these different mining stocks do, which some of them I'm active in, sometimes some of them more than other ones. And yeah, I don't care. I don't care a whole lot about what that price is. And one that's often talked about nowadays, Bitcoin. Okay, we're up here testing this 17,000 area, and Bitcoin just kind of seems to do for a while has been doing the same thing. It gives a rally up, and then it fails. And it kind of goes sideways, and in the sideways it rallies up a little bit, and it fails, and it goes sideways, and it rallies up, and goes sideways, and then it fails. And then it rallies up, then it fails, and it goes sideways, and it fails, and it kind of goes sideways, and it rallies up. So I'm guessing it's going to fail. But, you know, if you've watched this video before, why does that keep coming back? It's one thing about Thinkorswim that just it's like sometimes it just doesn't remember. But look at this. Look how it's kind of getting squeezed in this going this way. Look at it's really long, smaller, kind of, and in this case, I'll drop down. But you know, as you might know, that I do live in the United States, but the state that I live in does not offer me enough freedom that I can legally trade Bitcoin. Trading Bitcoin is like, I don't know if it's just like not wearing your seatbelt, or if it's as bad as heroin. I don't know where it is on the criminal spectrum. But in the state of Hawaii, you are not granted enough freedom to be able to trade this. So, you know, when I was a kid, they used to call it the U.S. the land of the free. I don't think it's that anymore, because if you can't trade a stinking asset in a certain state, because of what reason? Oh, we don't want you to lose your money. Come on, broom rider. I'm a grown man. If I want to lose some money, you know, but you'll let me go to Vegas and lose my money that way, right? Yeah, I gotcha. Anyways, so I just watch this. I watch this because I enjoy seeing what's going on with it, and I like reading charts. I like trying to figure out what I think is going to happen. But we see the volume is really low. It's hard for anything to happen with low volume. Sometimes I watch Bitcoin. Sometimes I watch Bitcoin videos, and they saying something like there's getting to be higher and higher numbers of wallets or something. Maybe that's because these exchanges are basically criminalizing their freaking customers which my prediction is SBF is not going to be held accountable. I think he's going to be, it's going to be like a, what do you call that? Like a, I don't know if this is the right term for it, but I'm going to use it anyways, like paper tiger. I think it's just going to be a bunch of show. I don't think he's really going to get in trouble. Just like John Corzine, when he stole all that money from people from MF Global, did he get in trouble? No. Why not? Political connections. And I think that's going to be the same thing with this this out of shape dude. I know. Anyways, just do some push-ups, man, and start running. Stop playing so much video games. Anyways, yeah. So right now the MACD is going, moving up, moving on up to the sky. Yeah. So what's gonna happen with Bitcoin? I don't know. Like we'll see. Right now it's like it's definitely is it gonna be able to break above this 17,000? If so, we got the big number is back up here. We got to see it. Like there's gonna be all these little ones, all these little points of resistance, right? Like this is a point of resistance right now, right here. Up here, like there's we can come up with all right now, like that's a point of resistance. Couldn't even break that, but definitely here. But ultimately, like this high, right, in the last 3 months, the high, like let's say get above 23,000 and stay above 23,000, because Bitcoin will get above a certain number, but it doesn't stay above a certain number. So I think I think that if you live in a state that gives you enough freedom to be able to trade Bitcoin, then I think you should trade Bitcoin. That's what I would do. I would not be hodling Bitcoin on the short side or the long side. I would not be opening these long-term positions. I'd be doing short-term positions, and I'd be trying to, sometimes I'd be day trading, right? I'd be looking to get in and get out, get in and get out, get in and get out. If you can ride, if you can get, I don't know how much this would be if you caught, you know, if you caught 50% of this movement, you'd probably make a good amount of money. If you caught 50% of this movement, you'd probably make a good amount of money. Look, it dropped from here down to here. And you got to see if there's a way you can paper trade Bitcoin, and you start testing out what it is you're doing. Ledger X, they changed their name. Somehow they affiliated themselves with Sam Bankman-Fried, and they with the FTX scandal, and then you know, maybe they knew that they were scamming their customers, and they thought that you know, as long as Sam Bankman-Fried, Fried, was paying off the politicians, that everything was going to be gravy, and so Ledger X apparently, I don't know what they changed their name to, but they seem to switch it back. But anyways, on Ledger X, you can sell options, but you know, all these different companies, I don't know, like I do, you know, I would like to be trading this, but I wouldn't want to be trading. I wouldn't want my money somehow tied up with all this scandalous stuff going on. What was it? There was that Celsius crash, and you know, going back, I don't know when it was, this Mt. Gox hack. That was like maybe 2017 or something like that. I can't remember for sure. And again, you know, like I said, I don't have enough freedom. I'm not a free enough human being to be able to trade this. So I just kind of pay attention to it a little bit, because it's you know, it's investment type stuff. But hey, you know, if you want to trade something that moves quite a bit, and you know, you want the chance to, you know, make a lot of money, take some risk. You like a little risk in life, dude? Right here, crude oil. It's leveraged like 100 to 1. It moves 1 penny, your position moves up $10 or down $10. It moves 50 cents for you, you made $50. It moves 50 cents against you, you lost $50. It moves $1, you lost or made $1,000. So you want to go broke quick? You don't have to go broke quick with Bitcoin. You don't have to go broke slow with Bitcoin. You can go broke quick or fast with with futures. You know, why risk you know, Sam Bankman-Fried? I mean, Freed. Why risk dealing with a guy like that when you can just deal with a fully regulated, totally established futures market, and you can lose all your money that way? You know, so I don't know. Obviously, I'm just joking. I don't want you to lose money. Just paper trade it. Paper trade that stuff. That's what you got to do. You don't have to. You can do whatever you want. You might live in the state of Hawaii also. You know, state of Hawaii doesn't think you're responsible enough to lose all your money unless you go to Vegas. But good buddy Brent thinks you're responsible enough to lose all your money. Hey, you want to lose all your money? Go for it, my friend. I don't care. Give all your money to Sam Bankman-Fried, so that way he can, you know, go live his polygamous lifestyle in the Bahamas, and you keep working to fund that, or don't. Whatever. If I were you, I wouldn't. Anyways, so paper trading. I know I'm going off on some rants right now with no moving averages to look at. I mean, I could put moving averages on them, but like I said, I got different charts and some different things set up for doing different things. And this one, it's with the MACD volume and nothing else. And so, paper trade. As I've been saying, paper trade, paper trade, paper trade. I am, right? Come on. I'm leading by example here. I'm paper trading. And if you don't want to deal with a lot of BS, or let's say you do want to deal with a lot of BS, but you realize that this is a lot of this stuff, there's levels to the game, right? It's one of these games where there's levels to it. Start off at a low level, right? I have success. This website is, everything that I'm doing is basically geared towards beginners, and people that don't want to necessarily master the stock market. If you want to master the stock market, I have success is not going to be your one-stop shop. It's not going to be. It'll get you started, but then you're going to go on somewhere else, because I'm not teaching people to master the stock market. I'm teaching beginners how to get some stuff. At the minimum, what you can learn to do is sell cash secured put options on stocks that you don't mind owning for possibly, if you had to, the rest of your life. Why is that good? Because like I showed you on H&R Block, all these other positions here, when it comes to option expiration time, you basically have two things that are going to happen. You're going to lose money or you're going to make money. Sometimes you'll break even, but for most of the time you either lose money or make money. But when you're selling cash secured put options on a stock that you don't mind owning, even for potentially the rest of your life if you had to, there's no way to lose at expiration. You either make money or you make money. You either win or you win. With all these other strategies, you can see, right? Positive, 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 negative. It's either going to win or lose. There's none that are at zero. Closest here is 50 cents, right? 50 cent negative, 50 cent highest. Once in a while, you will break even. But for the most part, those breaking evens, they're not counting for anything. You lose $600 or almost 600. You lose almost 1,000. That hurts. And making a little bit less than 200, making 65, that's not making up for it, right? Making $2.50, that's not making up for it. It's my H&R Block. But with H&R Block, I don't care if this says negative 200. Why don't I care? Because I've sold a cash secured put option. That means I have devoted $3,700 to buy 100 shares of H&R Block at $37 a share. I got paid $40 to make that commitment, and I'm willing to buy the shares, or I'm willing not to buy the shares. I don't care. I'm either going to keep the $40, or I'm going to keep the $40 and I'm going to buy an asset that pays me a dividend for a discount. Instead of at 42, I'm going to buy it on sale for 37. So I love that. When you're selling cash secured put options, you will start learning so much stuff that if you want to do more sophisticated trades over time, you'll be in a better position, right? A common thing is like when you're learning to drive, you don't hop in a Ferrari, right? You learn to drive an easy car. You start working your way up. And probably before you drive a Ferrari, you're probably going to get good with like Ford Mustang or like these normal type of sports cars. And eventually maybe you get a Formula 51 car or whatever. I'm not a car guy, so but I think you got the picture here. You know, if you're into sports, you're probably not going to get in the ring with a professional fighter your first time. Probably going to punch the bag a little bit. And once you punch the bag a little bit, maybe you hit the mitts a little bit, where your coach is moving around a little bit. And then sooner or later, maybe you spar somebody on your level. And you keep kind of going slowly up from there, right? So that's the same thing with trading. Learn something easy. This is if you structure selling cash secured put options well on stocks that you don't mind owning the rest of your life, it's pretty hard to lose money. The way you lose money is by not following the rules or doing a poor job at selecting a stock. When you're selecting stocks like NEO or something like that, some crappy stock that's like hasn't been around. Like, you got to pick some stocks that have been around for a while. They're probably going to stay around. That's why you should get the cash secured put option selection guide. Get this, 3 stocks I sell cash secured put options on. I think H&R Block might be on this list. And doesn't mean these are the only ones I sell cash secured put options on. There's a variety, but these are 3 that I've been doing consistently. And it's not to copy this exactly, especially when you read this. There's no stocks listed here. It's giving you a mental framework in order to follow so you can make your own decisions. The other thing about I Have Success, it's not going to be your one-stop shop unless you just want to learn how to sell cash secured put options. And the other thing is that I only bring the horse to the water. I only teach people to fish. I don't give fish. I don't put water in your mouth. That's it. You got to work for yourself. I can point you in the direction, but you got to do the work. Why is that? Because that's what I like. And I don't mean that's what I like to do. I mean that's what I like to receive. I don't like being told the answer. I like being given a mental framework so I don't need to rely on the suspect opinion of other people anymore. You know where I learned that from? This guy, Mike Mentzer. Mike Mentzer. First book I read from him, Mind, Body 2. He said, I'm going to teach you how to be your own coach so you never have to rely on the suspect opinion of others again. It's heavy duty too, mind and body. And so with that, you know, I'm past, I read that and I was like, wow, that's amazing. This guy doesn't want me to need him. He wants me to be independent. And that's what I want for you. I don't want you needing me. I want you to learn some mental frameworks so you can go off, make your own decision. And hopefully I can teach you to fish, or at least point you to the water. Okay, you guys have a fantastic day. And we're almost an hour long. If you made it through here, hey, leave me a comment. Introduce yourself. If you watch this whole thing and you did it because you're motivated to learn, if you only did it because of whatever other reason, if you want to leave a comment, you can, but I don't really care. Like, I want to associate with like-minded people. Right? So if you watch this whole thing, you're interested in learning, I don't care where you are on the spectrum. I only care that you have the same drive that I have. You guys have a fantastic day. Bye-bye.